Good morning, everybody. This is Torian Party Mentor here, and I'm coming to you with a quick video today on picking up on a slope and how to get down with the get down. Basically, let me go ahead and hide these floating meeting controls, and then I'm going to show you what I mean. And so, um, we got the H4 here. So here's a cool tip that I've identified. You know, you only can identify what's already there. So there's no such thing as new information. It's more so of new revelation. Revelation is exposure to what's already there. So let's get back to here. So I got to play that's even crazier or even cooler. I need to be careful with my words. So after every moving average cross, there's a pullback. And when I'm talking about pullback, I'm not talking about a pullback to uh, a moving average. I'm talking about a pullback in structure. Maybe small, maybe pretty big, but I'm gonna go down to like the H1. Okay, okay, for example, right? When I talk about the pullback, I'm talking about that first negative, the first candle that opposes what just happened. So we have a moving average cross to the upside. This is the first candle that opposes what just happened. And why is this significant? This is our entry. Someone would ask, why would I get in this early? You want to know why you would get in this early? Because it may not be a pullback at all. Sometimes it may just shoot straight to the top. Okay, let me go give you a better one. So, and this is obviously the 4 hour chart. So a 4 hour chart, moving average crosses, can last a pretty decent amount of time. All right. So now in this case, you don't really see anything, but I can promise you on the smaller time frames, there will definitely be pullbacks in the form of an opposing candle. So if it's a bearish trend, you look for a bullish candle. If it's a bullish trend, you look for a bearish candle. So let's just mark up a couple of these crosses, and we're going to go and identify what's happening on the 1 hour, on the 15 minute, and we're going to identify the cross on the 4 hour, and we're going to look for an entry on the 1 hour or the 15 minute. So let's go here. See what I got. We got let's go to the 15. Let's go to 1 hour. We're gonna go to where we at. Boom. All right. Now the 1 hour gave us an even better entry, but this is the moving average cross that we identified on the 4 hour, right? This is where we get in. So this is the moving average cross here. We look for an opposing candle, the first one. It don't even matter how much, just one. This one, right? And we in there for the buy, and we can hold that for a couple of days, right? Now, obviously, you got to think about the risk reward. I get that. Okay. Now, one thing you could do is look at how far that candle is from the 100 moving average and divide your capital by that, or divide your capital by what 500, whatever cushion you need to take the trade without any regard to any pullback. Right. That's all we do. All right. Let's go. See, I think I marked the other one up. All right. So this is another one. So this is a movement. This is the movement out across on the 1 hour, but it's crossing here on the 4 hour. All right. So we're looking for it's going down, crossing to the downside. We're looking for a buy candle, a bullish candle. When that bullish candle closes, you enter for the sell. All right. 619. Let's see if I think I marked up a third one. All right. Now this is the movement that was crossed going to the upside. Now, as you can see, it crossed days prior, right? But after this cross, it's crossed to the upside. So you're looking for a bearish candle. Once that bearish candle closes, you buy. That's simply it. That's the whole thing. That's the whole thing. So let's go see. I'm gonna even put it on. Let's do it on GU. Right. Same thing. We're gonna go to the 4 hour, identify some moving average crosses, then uh break down to the 1 hour. I think it was a 1 hour. Was it a 1 hour? Yes, break down to the 1 hour, and then we're gonna look for entry. All right, now this is GU, so we're gonna cover a couple of them. Moving average cross happened after that one. Moving average cross happened way back here, right? And so this one's there. And then we got another one. We got to get at least a third one. Okay, here's one. Boom. So we're going to hit that one right there. Boom. All right. Now we got those. We're going to go and we're going to go to the 1 hour. So that is 4/9/26. Let's go to the 1 hour. Look for 4/9/26. As you can see, the moving average cross happened a couple days prior. All right. Which says what? What did that say, class? That says moving average crosses occur on smaller time frames before they do on the bigger time frames. All right. By the time the moving average cross occurs on the 4 hour, the trend has already changed on the 1 hour, which shows the alignment of all the trend of the charts from the smallest to the greatest. All right. So we moving average cross going to the upside. We're looking for a bearish candle after the moving average cross, and we enter for the buy. Hold it for a couple of days, 200 pips. Let's see if we can go to the next one. Where was the next one at? Let's go back to the 4 hour. We got a few more minutes before I got to go. All right, so that was 5/14/26. Go back to the 1 hour. We're looking for 5/14/26. This to the downside. All right, moving average cross happened here on a 4 hour. It happened here a couple days prior. All right, the first bearish candle, it closes, we enter for the sell. All right, that's 96 pips, not bad. The market did stretch up on this, but that's the cool thing about the 1 hour chart. You don't have to hold it multiple days. You can if you want to, but you don't have to. All right, let's look for the last one. So the last one came, oh, that's so nice. Last one came here, and that's 7/7/26. So we're gonna go to the 1 hour chart, time frames, 1 hour chart, boom, 7/7/26. All right, it should be coming up soon. Boom. Moving average cross to the upside. All right, the first bearish candle, we enter for the buy. We don't care about the retracement. We know that it has to go up. The moving average cross says to go up, it's going up. It goes up, 63 pips. Profit is profit, and it kept going up. Right. So here, that's 130 pips. That's the strategy, guys. Now, obviously, that you can see, there will be pullbacks. There will be some drawdown, but make sure that you give yourself enough cushion. All right. If you give yourself enough cushion to handle the drawdown, all right. This strategy can be used on prop firms. It can be used to grow small accounts. If you want to use it to grow small accounts, all you would have to do is dump down. So instead of using the 4 hour, use the 1 hour moving average cross and look for entries on. Let's just do that. So we're going to go to the we're going to go to gold. And this is what we're going to do to grow small accounts. So we go to gold, and we're going to first clear up all these vertical lines. Clear the vertical lines. We're going to go 1 hour. We're going to look for 1 hour moving average crosses. We had one here. We had one here. And then we had another one there. So they will be quick. Okay. Let me just use this one so that it can make sense. So 1 hour moving average cross. And this part is if you want to grow smaller accounts. So 1 hour moving average cross on 7/2. We go down to the you can go down to the 5 minute or 15 minute, depending on where you are. So July 2nd, we're gonna go to the 5 minute. Why did it do that? I needed to go here. Time frames. Let's go here. Let's just go all the way back. I need to go a little faster. A little faster time frame wise. And that's why I did that. Okay. What's up, Rick? What? I'm actually recording. Wait, somebody for church. You ready for church? Okay. Well, yeah, I'll be down there in a second. I'm recording, Greg. You gotta wait. Okay. So let's go down to the 5 minute, July 2nd. July 2nd, we had a moving average cross. I think that was to the, it's going to say, it's actually going to show because we should see moving average cross prior to July 2nd. So let's see what we got. July 2nd is coming up in a few days. I don't know why it does this. And we are there yet. Are we there yet? Are we there yet? July 2nd, moving average cross to the upside. All right, moving average cross to the upside already happened on a 1 hour time frame. Um, and so the first bearish candle after the moving average cross on 1 hour, we buy, right? We buy, say for instance, we get in here for the buy, and what does the market do? It shoots up for a couple days. One entry, one entry for 1,200 pips. Okay. Now the next one was on the next one was on July 22nd. So we go to the 5 minute time frame. We're gonna scoot all the way down there because that was only a couple of days ago. I think that was July 22nd or July 21st. Let's see what we have. Boom. All right. Now, if you're not sure as to what you should be doing, you should see what you're looking for already happen. So if I say, for instance, I hit the 1 hour chart, I mark up my charts for moving average crosses, and I'm trying to decide. I forgot where I have. If I don't have multiple screens up, if you do have multiple screens up, you won't have to do this. But if you don't have multiple screens up, look for the previous moving average cross on the 5 minute. So if it's crossing up, then we're looking for buys. So if we're looking for buys, that first bearish candle, you buy. All right, first bearish candle, you buy. So if we bought right here, we bought right there. Get this one. All right, that will be one. Just pull this down. I don't know why it does that. If we bought right there, then that will be 700 pips. Right, and that's the whole strategy, guys. You look for moving average cross on a bigger time frame, and then you go down to a smaller time frame. Either two. So if you're looking at the 4 hour time frame, you either go to the 1 hour or 15 minute. If you're looking at the uh 1 hour time frame, you can do the 15 minute or the 5 minute. And you want to look for after the moving average cross, right? You want to see you're looking for a trade in that direction, right? So if you scout from the bigger time frames. Once you see what you need to see, or we stop. Once you see what you need to see, you go to the smaller time frame to enter your trade. And as you can see, for example, with this trade right here, if you got in, so that's July 10th. Let's just show what would have happened if we looked at July 10th for the entry, and because we're looking for and always confirm yourself, moving average cross to the downside, right? July 10th for the entry, we get the first positive, the first bullish candle we enter for the sell. So if we enter it right here for the sell, and then we go back to the 1 hour time frame to manage the trade, instead of managing it on the 15 minute, we go to the 1 hour time frame. That one trade over the period of 6 days, right? Now, actually, you would have had it. It would have got basically you would have wasted a few days or got out. So you'd have made between that's 1,500 pips within 6 days. Now, obviously, the pullback is here, but just off the first 2 days would have been 1,500. So the strategy works, guys. That's all I want to say for this particular thing. We're still using the slope of the moving averages to determine the direction we trade in, but I just wanted to bring you another piece of information to help to spot and have a strategy on any commodity, any indice, any currency pair as to how to use the slope of the moving averages to identify the trade entry. Also, like I said before, be mindful of your risk to reward ratios. Be mindful of how much cushion you give yourself. If you're trading gold, give yourself plenty of cushion, right? It's no race. If you got the right pace, you'll get to the end of the journey. All right, guys, y'all have a good day. I'm out here.